I hope you are enjoying the markets this morning as much as I am, and that you didn't take the odd route that a couple of Tesla individuals reported on X the other day that they were selling all of their Tesla stock. Bad timing, bad timing. Well, as the market does scream higher today, remember that there's a knock-on effect. This knock-on effect is among the well-to-do, the people who are stock owners. And to the extent that they were putting their hands in their pockets over the last couple of months because the stock market had gone down so much, and they were getting a little bit fearful of whether they could spend as loosely as they've been spending recently. Now, with the market going back up, we're only within 5% of being to all-time highs on the NASDAQ and on the Dow and on the S&P. As we get closer and closer to that, I think you're going to see a change in consumer sentiment, certainly among that class of people, and those people will start to get start spending again. So that knock-on effect will impact everything, including the earnings of companies that you might be invested in, or that just in general will uplift the entire stock market. So let's talk this morning. I got an awful lot of information this morning about several different people making predictions about Tesla stock. So let's take a quick look. Let's start with Cantor Fitzgerald. They reaffirmed their overweight rating on Tesla stock with a $355 price target, getting close at 319 or something just a few minutes ago when I checked. That decision comes despite Tesla experiencing a sharp decline in new vehicle sales across several European countries. Now, let's just remind everybody, I'm sure you're already thinking this way. We won't really know what's happening in Europe until the end of May. When we start seeing those numbers coming in the beginning of June, then we'll have a real understanding of what the situation is in Europe. I suspect we'll start seeing a few better numbers later this month, but the changeover of Berlin to the new Model Y undoubtedly has impacted things over there. We'll see. Maybe not. Maybe it's really maybe there is some brand destruction, but it's not what I'm thinking is happening over there. We'll see. We'll see. I could be wrong. According to Investing Pro data, Tesla currently trades at a PE ratio of 156.23. Of course, remember, PEs of this type are always looking forward. So that's a pretty strong PE, but other people might have a different number, suggesting a premium valuation while maintaining a strong financials with a current ratio of 2.0. Man, that's a great ratio. Cantor Fitzgerald analyst Andre Shepard, commenting on the situation, noted the stark contrast between the current sales figures and those from previous years. Despite these challenges, the firm remains optimistic about Tesla's prospects and has not altered its price target or its stock rating, rather. All right, then this from Tip Ranks. Here's another way of looking at things. This investor, he goes by the pseudonym of Semiconductor Analyst, points out that no matter how strong the rally looks, the valuation story may tell a different tale. Now, if you don't follow Tip Ranks has a bunch of people on there that don't identify by their actual name, and they run sample. They give their projections, etc., and then they get graded. Okay, and so this guy is one of those individuals. He says, if you cut through the noise, Semiconductor Analyst broke down every piece of the Tesla puzzle in an attempt to assess what the company's actually worth. Interestingly, futuristic projects like robotaxi and humanoid robots don't even factor into his valuation, as they're deemed too speculative to include. I try not to include businesses that don't even exist yet in my valuations, explains Semiconductor Analyst. It sounds like, is this Gary Black just in another place? Instead, the investor zeroes in on Tesla's two core engines, EVs and energies. While both remain growth drivers, he argues that even in a bullish scenario, the fundamentals don't justify the current share price. We would all agree on that. Based on my estimates, he says, that puts the fair value somewhere around $205 a share, $165 for auto and $40 for energy. I think that's right. I think that's reasonable. I could say 225 and, he wouldn't argue probably, which keeps me on the sidelines from now, says Semiconductor Analyst, who rates Tesla shares a hold. Well, if he's that kind of, if that's how he likes to place his bets, more power to him. I like to place my bets on companies that see the future, get the future, and have somebody like an Elon Musk running the company. As for Wall Street, the jury's still out. 16 buys, 10 holds, 11 sells. Analysts are nearly even divided, leaving Tesla with a consensus hold rating. The average 12-month price target right now is 284, which of course we have just roundly passed, going up to 319 again if the number holds this morning. So then I saw this article. You know, I don't commonly talk a lot about the technicals. We have Brian Wang for that, and and also Nicholas Gibbs talks about the technicals. But here is one from a professional technical analyst. This is from Chartist from Investopedia. Tesla shares come into the week trading at their highest levels in more than 2 months as the stock gained ground in each of the last 3 weeks. The stock started gaining traction late last month when, after Elon Musk, during the company's first earnings call, said he would be spending more time with the company. More recently, Tesla shares received a boost after the Trump administration announced a trade agreement with the UK, and then suggested there's more on the way. Now, trade news will likely set the tone this week also, after Treasury Secretary Scott Bessent and Trade Representative Jamieson Greer flagged substantial progress in U.S.-China trade talks over the weekend, adding that details will be discussed on Monday, which now the details are out and there's not much really to see there. 30% for China, 10%. We're charging them 30% coming in. They're charging us 10% for our stuff coming into their country. And we have a 90-day hold while things are evaluated. Tesla's shares have recovered about 40% from last month's low. However, the stock is still down 26% since the beginning of the year through Friday's close, due in part to concerns that Musk's involvement with the Trump administration could be weighing on sales. Below, we take a closer look at Tesla's chart, use technical analysis. So, a triple bottom confirmation. Tesla shares forged a triple bottom on the chart between early March and late April, setting the stage for a bullish reversal. If you watch the channel often, you know that Nicholas Gibbs and Brian Wang both pointed to this triple bottom and said that was, pretty good evidence that we were never going to, or reasonably speaking, never, ever see those lows again. Indeed, the stock confirmed the pattern in Friday's trading session, breaking out above its formation's neckline and closing above the closely watched 200-day moving average. Moreover, the relative strength index signals bullish price momentum and sits comfortably below overbought levels to provide an ample opportunity on the upside. Let's identify two crucial overhead areas on the Tesla chart where the shares may encounter resistance, and also locate key support levels to monitor during future retracements. Tesla shares gained around 5% on Friday to around 298, and of course they're up 7% this morning. But that, of course, this article was written before what happened today. Further buying this week could see Tesla bulls drive a move to the 360 area. So sitting around 319, we've got a long way to go on this particular chartist analysis. Investors, and that's also, I believe 260 is where Brian Wang said the other day, if we break through this 220 resistance area, we're probably going to 360. I think that's correct. Let me know in the comments if I got it right. Investors who have been accumulating shares at lower prices may look for exit points at this location near a trend line that connects last year's November twin peaks with this year's February counter trend swinging high. Listen, once again, the all-time high that we reached was a combination of two things: a very risk-on market, and that was combined with the promise of robotaxi, because Musk's involvement with the Trump administration was seen as providing a potential for the federal government to provide nationwide licensing, if you will, or nationwide okay to go ahead with robotaxi everywhere rather than a state-by-state basis. We seem to have that happening, sort of, maybe. It's not 100% clear that we have that right now, but it's certainly getting closer and still is believed to be happening. The robotaxi rollout in Austin is now the driving thing that is replacing that nationwide option, and that's why I'm believing all-time highs will happen sometime around June 1 as the FOMO kicks in, or after June 1 into June as the actual rollout begins to happen. So they go on to say, buying above this area may see a rally towards 430, That level on the chart could provide selling pressure near the January peaks, which also closed closely aligned with the trough of the first pullback. Key support levels to monitor. The first level to watch during retracement sits around 289. This area on the chart provides a confluence floor from the nearby 200-day moving average and the triple bottom pattern's neckline, which may flip from an area of prior resistance into future support. Finally, selling below this level can see Tesla shares revisit lower support at 225. I think in order to visit the 225 again, which I think will never happen, actually, you'd have to see a complete reversal of the economic situation, of the overall trend in stocks, and also some extremely bad news from Tesla, like Elon delaying the rollout of robotaxi until next year or something. AJ says this morning, European Commission bureaucracies slow walk the approval of driving technology and thus share responsibility for countless preventable traffic deaths and harm to people. The EU classified self-driving as high risk and as an AI application, but left out that it's a significant safety improvement. Both the US and China already allow self-driving technology within certain limits. Why is the EU always last? Oh yeah, this is Randy Kirk. This is a very, very good time. If you haven't thought about it yet, to hit that like button. This is just a reminder, if you could just hit the like button, it helps the algo. Hit subscribe if you haven't subscribed yet. Maybe you're new to the channel and you haven't subscribed yet. Hey, I'd love to have you on board as a subscriber, and also hit the notify, because then it lets you know that later on today, Larry Goldberg will be here. That'll be around 5:15, and around 7:15, Brian White on a regular kind of day. And then, of course, joining Patreon, that would be cool. I'd like to recommend that you watch a video that was done by All In Podcast bestie David Friedberg as he interviewed the Secretary of the Interior, Doug Burgum. Now, you may remember that Doug Burgum, for a minute, was running for president, and then he said, okay, obviously Trump's going to win, I back out, and he threw his 100% support behind the president. In this interview, you'll meet another tech billionaire. If you haven't paid any attention to Doug Burgum, he's another super knowledgeable guy. He's very knowledgeable as the ex-governor of North Dakota, and somebody who has really spent a lot of time in this area of energy. He knows all, and also working with the Indians, the native tribes and whatnot. He's the perfect guy for Interior, as you'll see if you listen to this. He's knowledgeable. He is incredible. Like everybody else, a great communicator. All these cabinet members, they blow my mind. Anyway, the best part of the interview is that Doug says that he and President Trump are fully aware of the need for energy from a wealth standpoint. In other words, energy in any country equals wealth in that country. The more energy you have, the wealthier the country gets. And they're also fully cognizant of the requirement for energy as a strategic issue, that the Chinese communists they're building their energy capabilities at a much faster pace than the United States is. Now they're way behind, so they're catching up in terms of per capita, which will build their wealth. Okay, they're doing the right thing. I mean, it's a smart move, but the United States, because we just didn't need much more electricity over the last 40 years, has just not built out any serious amounts of energy at all. Well, we need to do it now, and the Trump administration gets it. Burgum gets it. So this is fantastic. They've set up what's called the National Energy Dominance Group, and it's kind of a group of cabinet members that meet together that all have impacts on this energy area. And what they're going to try to do, they're going to just knock out the regulations that are getting in the way of, like, nuclear and natural gas. Those are the two biggies. Of course, solar, that's all taking place. Solar is the ultimate result. I think everybody probably in the world at this point knows that eventually it's going to be solar, but it's faster to keep pumping oil. It's faster and cleaner to do gas. It turns out that You need coal for things like steel, and he'll explains all that in this video. I just really recommend that you give a listen. I think it'll give you a great appreciation for yet another cabinet member and for also what's being done. Oh, he also mentioned that they're cognizant. This is so exciting. They're cognizant of the benefit of having distributed energy like these mini nukes. This is a focus of theirs, is getting these mini nukes out there, and because you can put them right where you need them. And this is also true for some gas potential, where you can put these data centers right on the gas pipe, if you will, right in the field where the gas is located. This is really smart, and he recognizes that it's strategically smart, as well as eliminating the need for transmission lines, which reduces the amount that you need and reduces the cost. Anyway, all of that was happening. That was just a fantastic interview. Loved every minute of it. The VIX this morning has finally dropped down under 20. That's another piece of great news this morning. It's sitting at 18.9 last time I looked. Okay, I'm expecting Trump. His next move is going to be against bond yields. So if you have any inclination to get into the bonds, this is the third time I've recommended bonds without being. This is my life experience. Okay, this has nothing to do with me. I don't have any chops as a financial analyst, so I'm not giving you investment advice. I'm just saying it's way too high again. The yields are way too high. It's time to buy bonds. And I believe that Trump is going to start pushing it from the bully pulpit. I think that he's going to indicate that he's going to say what I just said, that bond yields are too high. They need to come down. And he might even say, you should buy bonds, like he has with stocks a couple of times, because I think basically he's going to start taking some actions. Now, what can he do besides just scream about it? I think he's going to use the Treasury and try to get the Fed to go along with the Treasury. And this is what he can do. Number one, the Treasury can adjust the maturity and the composition of its debt issuance. It can issue more short-term Treasuries instead of the long-term bonds, which will reduce the number of bonds out there, which means that they're, supply demand, right? Potentially that lowers the yields due to decreased supply pressure. You can also issue fewer long-term bonds over the next month. So you can issue fewer of them. Okay, you can issue more short-term bonds, and you can also start buying. Okay, that's the other thing. You can coordinate with the Federal Reserve. While the Federal Reserve operates independently, they still have lunch every week, and they talk about what'd be the best for the country. So the Fed can lower yields through open market operations, purchasing Treasury securities. This is quantitative easing. This is the Fed that has to do that, though. That increases demand, driving prices up and yields down. Interest rate policy. They can lower the federal funds rate. This is what President Trump has been talking about. You need to lower those rates, and that'll help on the pushing down longer-term Treasury yields. And then forward guidance. They can signal that they're going to lower rates in the future. That does even more. Fiscal policy and deficit management. The Treasury's borrowing needs are tied to fiscal policy. If we reduce federal deficits through long-range spending cuts, our revenue increases, which the Trump administration is working on both. We've talked about this morning, about ways, the pharmacy thing that we talked about last night on the show, this thing where they're reducing the cost of pharmaceuticals in the United States to the cost in the lowest nation on earth. That is going to dramatically, the 𝐷 came up with a number of at least 65 billion that it's going to take off the deficit. So that's going to help reduce the demand for the Treasury to go out and sell bonds. So all this stuff, increasing revenue, decreasing expenses, all of those things are going to reduce the number of bonds that need to be bought, which is going to reduce interest rates and increase the value, the people paying more for the bonds. Debt management policies. The Treasury can use buyback programs, as we said that earlier. The Treasury can also signal future borrowing plans. We said that as well. Okay. We have an interesting tidbit this morning. I thought you'd like this. Holy smokes. According to Eric L. Dow, DAUGH, he says, holy smokes, Treasury Secretary Scott Bessent just revealed that the Chinese said during their closed-door talks over the weekend that they ignored their trade commitments under Biden because they knew he was weak. The Chinese delegation basically told us that once President Biden came into office, they just ignored their obligations. We had an excellent trade agreement with China. The Trump administration did in the first 4 years, and the Biden administration chose not to enforce it. Biden's people totally screwed over the country in many ways. Weakness on the world stage caused massive damage, including, in Trump's opinion, I can't agree. I can agree with it. That is the reason we have a Ukraine-Russia war right now, which, as that winds down, is going to cost the U.S. government less, reducing the deficit. Trump approval has bumped up to the highest since he took office, equal to the highest, actually, at 52% this morning. So that's pretty cool. All right, let's take a look at where the markets are right now. By the way, I didn't remember to write this down. We're also holding in at 45% in terms of the consumer. I mean, the folks out there in polling on Rasmussen, the highest levels of believing that the country is going in the right direction. And it came way up after Trump came into office, and it is holding at those levels even this morning. So this morning, we have a second leg of the markets going up. So we had this big leg up this morning, started up at a new high for the week, month, whatever. And then they kind of dipped down a little bit, and now there's a new leg going up. So but Tesla has not really participated in that second leg. So right now, Tesla's sitting fairly close to the highs that it's hit for this morning, but it's not gone even further as the NASDAQ, the Dow, and the S&P have. So we've got Tesla up 7.04%, $319. It's been as high as 322. We've got the S&P up 3.04% this morning at 5,831. We're only 300 points away from all-time highs, almost exactly 300 points away, and going up this morning by 150. NASDAQ up 4.13%, 18,669, also 5% away. Dow Jones up 2.58% this morning. Magnificent Seven all doing super well this morning. Apple up 6, and Google up 3, Amazon up 8, Meta up almost 8, Microsoft up 1.83. These are all percentages, and NVIDIA up 5.16. Some of those have taken that second lap this morning, if you will, the second leap up. The Cathie Woods are all up strongly this morning. Now, all of that is happening in contradistinction to what we just talked about in terms of the bond market, and the bond market is yields are up this morning 7.6 basis points to 4.451. There is resistance at this level. Actually, the real resistance is 4.5. So yeah, is there a possibility it goes to 4.5? Yes. Could it break through and go back to 5? I suppose, but it makes no sense. With the government cutting, as the way the government is cutting, with the Ukraine war, maybe going to slow down or maybe stop. There's every reason to believe that the deficit is going to be dropping. That means that what we just talked about. Okay, so I don't think this can hold, and I think Trump's going to start beating this number down. So do what you will. I'm not a bond guy. I don't invest in bonds. But if you're inclined to invest in bonds, I think this would be a great time. Not investment advice, I think. Yeah. Okay, so we've got oil up $1.22 to 62.24. I think oil is going to trade between 55 and 65. That's going to be the new range. And Brent up about the same amount this morning, about 2%. Natural gas down 4.16%, coming back down into the middle of its range, 3.63. We have got gold down $114 this morning. So gold right now acting as it commonly does, a storehouse of value. People are saying, okay, I'd rather put my money in equities right now. So they're pulling out of gold, 3,229, still an awfully strong number. Silver's also down 0.94% this morning to 32.6, and copper's down 0.95% to 4.609. The dollar is at month's high for the month of May, the highest it's been. And Bitcoin has dropped 1851. This is a little bit, I would call that very, very different than what it's been doing lately. So it's to the extent that people believe that Bitcoin is also a storehouse of value, maybe people saying, I'm taking my money out of Bitcoin, putting it in equities. Not sure, but I mean, it's a good number, 102.7. So 102,700. So that's a strong number for a Bitcoin. All right. So there you have it. That's what's going on this morning. Remember to watch Larry Goldberg and I'm sure have a great conversation later on tonight around 5:15 California time, actually around 2:15 Hawaii time. And then we'll have Brian White on at 7:45 tonight. And I think we'll be talking a lot about Robotaxi because that's what's happening, man. That's the next thing on the list we got to really be looking forward to. Last night, my show last night got the highest numbers that any show has gotten on my channel for a very long time. So the regular Friday night show, Monday morning show that happens on Sunday night. If you haven't seen that yet, I'll put a card up for that. You might want to go back and check it out. All right. One last time. Tesla still sitting 7.06%, 319. So kind of been real flat for a while now. All right. That's all I got for you. Let me know in the comments below if you think that I got anything completely wrong this morning. I'd love to hear from you. And it's been great talking to you.